Burn rate. What is that? Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale. And today we're back with another installment of What is that? Where we describe financial terms and topics and make them super easy for you to understand. Today we're talking about burn rate. This has everything to do with a business owner's finances, but honestly, it can apply to your personal finances too. So let's get to it and start right at the beginning. Burn rate. What is that? The burn rate is used by companies and investors to determine how much cash they currently have, how much of it they will need monthly, and how long will it last until they start generating more revenue or revenue to begin with. Basically, you have this money in the bank and you have expenses that you have every month, fixed costs. How much of that money will you burn every single month? And how many months will that cash last you? A company's burn rate, that is how much money they will spend monthly, is used as a measuring stick for Runway. Runway is the amount of time that you will have this cash for. That is how long the cash will last you. And typically, Runway is defined in months. When I think about the word burn rate, I literally visualize a bonfire. Like a business is burning this cash, and how long will this fire burn without having to add more wood? That is, more cash. So let's do an example to put this into perspective. Let's say a company has $500,000 in cash, and its monthly expenses are approximately $50,000 a month. That's their burn rate. So what's their runway? 10 months. We calculated the burn rate by adding up all of our fixed costs, and we typically do that from a budget. So we calculate them and we determine every month this business needs at least $50,000 to cover all of their fixed costs. We then took the $500,000 in cash divided by the $50,000 needed monthly, and that's how we arrived at the 10-month runway. A company can reduce its burn rate and increase its runway if it reduces its operating expenses and/or increases its revenue. By decreasing your expenses, your burn rate goes down, which means your runway goes up. You have cash for a longer period of time because you have less expenses. By increasing your revenues, your burn rate will stay the same. You'll still have the same fixed costs. However, your runway will now be longer because you'll have more cash for your burn rate. During the pandemic, burn rate and runway was something that we've been helping business owners with really closely. Understanding how much cash you have and how long it's gonna last and what you can do with burn rate is something that has been super important all year long. We hope you enjoyed this latest installment of What is that? If you have a financial term or topic that you'd like us to discuss, leave that in the comments below. We'd love your suggestions. Hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.